The Canadian dollar rallied against its U.S. counterpart to close out the trading week, driven by higher crude oil prices and a larger-than-expected January jobs report. The loonie has enjoyed a decent start to the year, but can the currency maintain its momentum for the rest of the month? It might be challenging amid a renewed rally in the greenback. According to Statistics Canada, the Canadian economy added 150,000 new jobs in January, topping the market estimate of 15,000. This is also up from the creation of more than 69,000 positions. The unemployment rate was unchanged at 5% last month. The monster gains were supported by a full-time employment change of 121,100, while part-time jobs increased by 28,900. Average weekly hours eased to 4.5% year-over-year, down from 4.7% in December. This comes after the Statistics Agency reported that the Canadian trade deficit diminished to $160 million in December, down from $220 million in November. This was smaller than economists' expectations of $500 million. Exports tumbled 1.2% to $63 billion, while imports dropped 1.3% to $63.1 billion. Both data metrics are the lowest since early 2022. These numbers suggest that Canadians' fears of a recession are overblown. January's blockbuster jobs report is proof that there is still plenty of wind in the sails for Canada's labour market, Marwa Abdu with the Canadian Chamber of Commerce told CBC News. The big takeaway from this morning's data is that calls for a recession will have to wait. The loonie benefited from higher energy prices on Friday. Arch West Texas Intermediate, WTI, crude oil futures advanced $1.73, or 2.22%, to $79.79 per barrel on the New York Mercantile Exchange. The Canadian bond market was up across the board, with the BNCH Mark 10-year yield rising 11.9 basis points to 3.17%. The one-year bill rose 8 basis points to 4.73%, while the 30-year bond climbed 8.9 basis points to 3.176%. The USD-CAD currency pair June ped 0.83% to 1.3345, from an opening of 1.3457, at 1900 Greenwich Mean Time on Friday. The EUR-CAD plummeted by 1.44% to 1.4245, from an opening of 1.4453.